when you have the bravery to imagine and the will to get things done. That's Africanacity. That's Absa. Corporate and Investment Banking.
You're watching Africa Trade and Business. I am Noluthando Mthonti-Mlambo. On the show, we're focusing on South Africa. We kick things off with a look at recent fuel increases and how consumers are responding to that. Before we discuss the outlook for the country's property sector and the kind of performance we can anticipate this year. That's all coming up, but first, your news making headlines across Africa. Burkina Faso says it did not award a mining permit to Nord Gold to woo Russia. Those comments by its mines minister seek to address concerns that closer ties with Moscow are being sought. The prospect of the group expanding its presence in Africa has troubled France and the United States, who say it exploits mineral resources in countries where it operates. Nord Gold, which is under U.S. sanctions, applied for the permit back in 2017. The facility is expected to produce about 2.5 million tons of gold over its 4-year life and will kick off production this year. And Anglo-American CEO Duncan Wanblad says he remains bullish about South Africa and that Anglo is still looking to invest. But he's added that the country must urgently fix its corruption, energy and logistics scourges, and that the mining industry is keen to partner with the governments to do that. Now, Anglo has invested 110 billion rand in SA over the past 5 years. And Sibanye-Stillwaters is looking to grow its portfolio. According to Bloomberg, CEO Neil Froneman is interested in acquiring Zambia's Mopani copper mines. And that's as Sibanye pushes to secure metals key to the green energy transition. The miner is among investors involved in a sale process organized by Rothschild & Co. Froneman, meanwhile, says he's encouraged by Zambia's president's efforts to attract investors and hopes the government plays a constructive role in the potential acquisition. And Ghana's debt exchange program has been delayed again. The West African nations extended its registration deadline after some bondholders experienced technical glitches while completing the process. This is the 5th time that Ghana has extended the deadline for the scheme, which it needs to complete to secure a $3 billion bailout from the International Monetary Fund. And Nigeria's demonetization plan is facing backlash. According to Bloomberg, 3 state governors from Kaduna, Kogi and Zamfara are suing the federal government and are seeking the suspension of the central bank's plans to overhaul the design of the local units, which has caused a cash crisis and disrupted transactions in the West African nation. Now, the central bank recently decided to replace nearly $6 billion worth of notes with a new design and provided a 6-week window to phase out the old bills. Now, the cost of living for South Africans has continued to rise, and our reporter Ndawuleng Lechela took to streets to get a sense of how the recent fuel price hike has impacted motorists. Let's take a look.
South Africans have been dealt another blow. That's as fuel prices increased in February. Petrol and diesel rose by 28 cents and 9 cents a litre, respectively.
The petrol price increase is really frustrating. It's raining more on our pocket and everything. School fees are affected because of the very same petrol price increase. Food, everything.
Right now you feel like you work from hand to mouth because everything is just going up. Petrol is going up every 2 months, petrol is going up. And the increase in everything literally is going up.
Once you raise the prices, and most of our clients, they run away because they can't afford also to pay us whatever we want.
The main driver behind the hike is the rising cost of international petroleum product prices, which were pushed by stronger oil prices.
Had it not been for the strength of the rand against the dollar over the January period, those increases may in fact have been larger. Obviously, the reduction in the slate levy provided some extra relief. But in fact, when you look at the numbers, it's really international product prices, oil prices, that caused the increase, and the rand actually played a role in bringing that increase down.
The recent fuel price hike, coupled with rising interest rates, elevated inflation, and upcoming increase in energy costs, will further put pressure on cash-strapped consumers. And according to research, more than a quarter of South Africans are living below the poverty line.
South Africa has seen a rapid increase in interest rates over the past year and even into this year. Consumers are strained in South Africa also as well from the fact that we have seen high consumer price inflation, or in other words, the cost of living has risen quite significantly. This looks at a basket of goods and services that typical South Africans consume, and of course food features quite highly in it, as would transport costs and other factors. The rapid increase in prices has put strain on consumers, and of course as well for those who are indebted. This has been compounded by the fact that we have seen the upward pressure on borrowing costs. Looking forwards, we think that the interest rate hike cycle in South Africa is drawing to a close, and indeed that South Africa would look forward to a year where inflation starts to subside as well.
Despite this, institutions like the International Monetary Fund are still quite optimistic about Africa's most industrialized economy.
We don't know how the energy crisis is going to evolve.
Yeah.
But let me give you a sense where we're coming from on our revisions. Compared to October, we increased up our estimate for 2022 from 2.1 to 2.6. And this is basically because the data, actual data for the third quarter was pretty strong, better than anyone expected.
This is higher than the central bank's expectations of 0.3% growth for the year. Both forecasts, however, are quite tepid, further alluding to tougher times for South Africans moving forward. I'm Ntauling Lechela for Business Day TV in Johannesburg.
Well, we're taking a look now at South Africa's property sector. Bronwyn sat down with Klaus-Dieter Kaempfer, who's the head of Absa's commercial property, finance and equity investments business. The discussion started off with a look at how the current period of low growth and high interest rates, both locally and globally, is impacting the sector. Here's that conversation.
So what we're seeing now is people are focusing on optimizing their portfolios. People still looking at new investments, but I think overall through COVID and into 22 and now this year, new projects have been scarcer than previously.
So what trends do you see then shaping the sector this year, Klaus?
So I think what we're seeing is obviously a lot of focus on ESG, on solar installation, on optimizing water consumption. With new buildings, there is a lot of design around making buildings more efficient. So we're seeing that. A big focus during the last couple of years has been affordable and social housing, so it's been a very strong sector. And logistics, warehousing, light industrial. Obviously, the sectors that really did not go so well was before the end of COVID, hospitality and offices. Everyone is talking about offices.
Locally, we can't get away from the fact that load shedding is having a significant impact on all industries. How are you seeing it play out for the property sector, both directly and indirectly?
Yeah, I think obviously indirectly, the ongoing power situation in South Africa in particular has a negative impact on GDP. And I think the growth in the sector is very closely linked to the overall economy and the GDP of the economy. So that's has an impact on appetite for new projects and what operators focus on. I think the direct impact is twofold. It increases costs in terms of utilities, and it drives certainly what I previously mentioned, the investment in independent power production.
Is load shedding changing demand patterns? Because on one hand, you'd imagine demand for buildings with alternative energy sources rising, but just generally because of the impact of load shedding, as you've outlined there, that must hit overall demand, surely.
And it does. So I think individuals and businesses have become much more conscious about power consumption. So they're finding ways to be more efficient. So don't keep on the lights at night, use LED, choose when you have certain operations actually going. And some firms have partial power replacement installation, others might be able to afford full installations. And so I think everyone adapts to this new environment, which is not going away anytime soon.
And therefore, I would imagine, from a demand perspective particularly, the demand for buildings with alternative energy sources must be on the rise.
Sure. No, absolutely. And I think it's true across all subsectors. So I think if you look at industrial and warehousing, there is a lot of roof space that can be used for power supply. A lot of our clients with retail centers have built their own power supply, which sometimes can cover the entire consumption. And it's a day business, so that works very well. And the same for, we see some recovery in the office sector, and obviously their demand for facilities that have full or partial power backup is much higher.
We talk about all the flexibility that the property sector needs to have as it deals now with load shedding, but the sector still is recovering from the impact of COVID-19. And on that front, what have we seen in terms of the recovery from COVID-19? Is it firmly in the rearview mirror for the property sector, or are we still feeling the impact of the pandemic?
I think it's largely in the rearview mirror now. So what we've seen across different sectors is retail obviously had a lot of had fewer customers coming through the retail shopping centers, lower turnover, and that's recovered to pre-COVID levels. So if you look at trading densities, they're back up. The footfall is almost back up, but slightly less. If we look at residential, so there was an increase in vacancies in the resi sector, quite high. That's come down quite a bit. So it's like up to 18%, it came down to 12, maybe 10% now. And we see that reflected in the portfolios of our clients. I think what also happened, certainly in the REIT space, there was a huge amount of deleveraging. So the capital structures of a lot of the operators is much stronger now than it was before.
That was Klaus-Dieter Kaempfer, head of Absa's commercial property finance and equity investments business. And that's where we leave things with you for this week's episode of Africa Trade and Business. And we're back same time, same place next week. So be sure to join us.
When you have the bravery to imagine and the will to get things done, that's Africanacity. That's Absa. Corporate and investment banking.